Imagine waking up the day after the US election and realizing the entire direction of the crypto market has changed overnight. Not because of a Bitcoin halving, not because of a market crash, and not because of a global financial event, but because of a single political decision. That's the reality we're heading toward as the US election becomes one of the most powerful market catalysts crypto has ever seen. For the first time in history, both candidates running for the presidency are being evaluated not just on economic policy or foreign strategy, but on where they stand on Bitcoin, crypto regulation, stablecoins, and digital assets. And whether the next administration is pro-crypto or anti-crypto will determine everything from market liquidity to ETF expansion, exchange licensing, tax law, and even how much freedom Americans have to own and use digital assets. If you think politics doesn't move crypto, you're about to discover how quickly that belief can change. Let's begin with the reason this election is different from all previous ones. Crypto is no longer a niche market. Millions of Americans now hold digital assets. Bitcoin ETFs have brought Wall Street into the game. Stablecoin volume is larger than some payment networks. And US voters are beginning to care about crypto policy the same way they care about interest rates, taxes, and healthcare. Both parties know this. That's why crypto has moved from the background to the spotlight. And depending on who wins, the US could either become the global leader in digital asset innovation or fall years behind countries that are already moving faster. So, what is really at stake? Let's break it down. If the next administration supports crypto innovation, we could see a wave of regulatory clarity, clear rules for exchanges, a stablecoin framework that opens the door for institutional adoption, faster ETF approvals, and legal protection for developers and users. This would bring massive liquidity into the market, attract global capital, and reduce the regulatory fear that has been suppressing US crypto growth for years. On the other hand, if the new administration takes an aggressive stance against crypto, we could face increased enforcement, stricter exchange rules, limitations on self-custody, restrictions on stablecoin issuance, and slower institutional growth. In that scenario, capital will leave the US, not leave crypto. The industry would simply move offshore, especially to regions like the Middle East, Asia, and Europe, who are actively embracing digital asset innovation. Now let's talk about how the market reacts even before the election happens. Elections create uncertainty, and uncertainty creates volatility. Traders begin pricing in outcomes months in advance. Analyst predictions shift weekly. Whales begin repositioning based on policy expectations. If the leading candidate is perceived as pro-crypto, market sentiment strengthens. If the leading candidate is seen as hostile toward digital assets, risk appetite weakens. This means the crypto market may start reacting long before votes are counted. Bitcoin dominance could rise as investors seek safety. Altcoins may stall until regulatory direction becomes clearer. Stablecoin flows could increase as people hedge against volatility. The election becomes a psychological and financial pressure point for the entire industry. But here's where the story becomes even more interesting. The US election doesn't just impact crypto inside the United States. It impacts the global crypto landscape. Why? Because the US still sets the tone for financial regulation. When the US supports innovation, other countries follow. When the US blocks progress, other countries accelerate to fill the gap. A pro-crypto administration could lead to international cooperation, clearer global standards, and mainstream financial integration. An anti-crypto administration could trigger a global power shift where countries like the UAE, Singapore, Hong Kong, and Brazil become the new centers of digital finance. The election is not just a national decision, it's a global domino effect. Now let's discuss the most powerful element of this election cycle: regulatory control. The next administration will influence the leadership of the SEC, CFTC, Treasury Department, and key financial regulators. These agencies control enforcement, exchange approvals, stablecoin licensing, ETF expansion, custody rules, and market oversight. A leadership shift could completely transform the tone of U.S. crypto policy. Under a supportive administration, we could see reduced enforcement aggression, faster approval of new crypto investment products, and regulatory clarity that encourages innovation instead of punishing it. Under a restrictive administration, we could see ongoing lawsuits, delayed approvals, and tighter rules that push companies out of the U.S. market. But here's what most people don't know. The election may also determine what happens to stablecoins. Stablecoins are becoming the foundation of digital payments. If the next administration embraces a regulated stablecoin framework, the U.S. could dominate global digital dollar infrastructure. Banks, payment companies, and institutions would integrate stablecoins into mainstream finance. But if the administration restricts stablecoins, the digital dollar could fall behind CBDCs and offshore USD-backed assets. This matters because stablecoins influence everything: DeFi liquidity, exchange volume, NFT markets, and cross-border payments. The election could strengthen or weaken the USD's global power through digital rails. Now let's shift to Bitcoin specifically. Bitcoin has entered a new era where institutional adoption matters more than retail hype. The election will determine whether US institutions continue scaling into Bitcoin or slow down due to regulatory pressure. A pro-crypto administration could open the doors to new Bitcoin investment products, more ETF approvals, and financial integration at the banking level. A restrictive administration could slow institutional adoption, causing a temporary stagnation in US-based capital while international demand continues growing. Either way, Bitcoin will survive. But where the capital flows will change dramatically. Now let's talk strategy, because this is how you position yourself ahead of the market instead of reacting to it. First, watch policy signals, not headlines. Markets move on expectations long before laws are passed. Second, track exchange licensing developments. If more US exchanges begin receiving approvals, that's a bullish regulatory signal. Third, monitor stablecoin policy announcements. This will be one of the strongest market catalysts of the election cycle. Fourth, observe institutional language. If banks and asset managers become more vocal about crypto integration, the election narrative is shifting in favor of digital assets. Fifth, don't underestimate voter influence. Millions of American crypto holders represent real political leverage for the first time. As we approach the end of this video, here's the most important truth. The US election will not decide whether crypto succeeds. Crypto will succeed regardless. What the election will decide is where that success happens. Will the US lead the next phase of digital innovation, or will the opportunity shift to other regions? The next administration has the power to accelerate or delay American participation in the future of finance, and those who understand this before the market reacts will be positioned ahead of the biggest capital rotation of the decade. So stay informed, stay strategic, and stay focused, because the election won't just shape politics, it will shape markets, regulation, liquidity, and the next major crypto cycle. Thank you for watching, and I'll see you in the next video.